Hey, this is Kina Knisley, and this is The Life of the Land is in Its Real Estate. And I am here today with Lars Peterson, and we're going to talk about forbearance. Hi, Lars. Thanks for joining us today.
Hi, Kina. Thank you so much for having me and allowing me to illuminate a little bit this rather interesting topic.
Yes. All right. So go ahead and tell us a little bit about yourself first.
I sure will. I am originally from Germany, as probably some people can hear from my accent. I've lived in Hawaii, though, for over 21 years. I first became a lawyer in Germany, became a lawyer here in Hawaii as well, and have been practicing since 2005 in Hawaii. So I have a little bit of live and practical experience. Mostly I practice in the area of bankruptcy and filing consumer side and debtor and creditor workouts outside of bankruptcy, as well as some tax resolution.
Oh, wow. So let's talk about forbearance. So, what is it? Even me as a real estate agent, I am not super familiar with it. So, can you just kind of give us a breakdown of what is forbearance?
Yeah, I think in short, forbearance is a little bit of a trick, and I will tell you why. So when the pandemic struck, many lenders were highly encouraged by the federal government to provide forbearance as an option for struggling homeowners. And obviously, we had a lot of struggling homeowners, as well as tenants and others. But the idea was that there needs to be some remedy, some helpful way if somebody can't make a mortgage payment, because obviously we don't want to have a larger than usual or rather significant number of homeowners having to face foreclosure, so that more and more people, like that is just economically not tenable. Plus, we obviously don't want to have homeowners lose their property and be kicked out on the street. So forbearance was what the lenders, the mortgage lenders, the banks came up with. And what it truly means is that for a certain period agreed upon of time, you will not have to make your mortgage payments. When the time is up, generally all lenders require that you make all the missed mortgage payments immediately in the following month. So if you have a 6 months forbearance period, then in month 7, initially you would owe 7 monthly mortgage payments. And that's why I opened with that. I think it is a trick, because I think many homeowners, people in general, didn't understand that that is what lenders are offering.
So, wow. So, I read that at one point, 8.5% of all mortgages in the United States were in forbearance. Is that true? Was it that's such a significant amount?
From my practical experience, we come across it a lot in the realm of the bankruptcy law, of bankruptcy cases. My personal guess would be that it probably could be higher even than that. They have a significant number of homeowners has really taken advantage of this option, of this easy option, and mainly it is a very strong encouragement by the federal government um, to provide this option, that there is some form of relief. And I think that's what led to many people being cautious in a way that they would say, yes, let's just hold off on the mortgage payments and keep the money, and maybe try and use it, for times when maybe my business is not as busy, or I may become unemployed and have less income than before, and then I should have some money in reserve. I would be surprised if any single lender could really give you exact figures on the forbearance numbers. If they could really say, yes, 5.3% of our mortgage customers are in forbearance status right now, I would be surprised if they could do that. I think it's still so new. It has been in such a flux. Some people have then ended their forbearance, and many more have taken it on. So somewhere the number, the 8.5% is probably realistic. I would not be surprised if it is actually significantly higher than that.
Wow. So was everyone entitled to take forbearance, or were there some special conditions that they had to meet?
Uh, there was no absolute entitlement to a forbearance. Any mortgage that is federally backed, so Fannie Mae, Freddie Mac, and so forth, VA, I believe, they were kind of obligated through the federal government to offer forbearance as an option. There were also some technical outs, but in general, everything that is a federally backed mortgage, usually those people were entitled to at least request a forbearance. Under the CARES Act, it wasn't ordered, but the private lenders were with non-federally backed mortgages were strongly encouraged also to offer forbearance. And given the situation, just the societal situation, the circumstances that nobody probably had seen anything the like of this pandemic and its effects, many lenders would at least consider a forbearance. The question from a practical standpoint then always became, how realistic is that? Because I can always put up a great face to the front and say, of course, please apply for forbearance. But like with loan modifications and similar things, what the lenders do truly behind closed doors and how they would determine if somebody is eligible for forbearance or not, that was always, I don't think there are really any absolutely regulated and detailed criteria.
I do know, I work with a lot of investors who use hard money loans, which I did learn this past year were not federally backed and could be foreclosed on, which I mean, it was a great learning experience. Not really a time I wanted to learn it. So yes, so just know most hard money lenders would not take let you do forbearance. They can foreclose, and they can foreclose quickly. So with that being said, what are the risks of taking forbearance?
Well, I think the greatest risk taken of forbearance is when the forbearance period comes to an end. And then generally all forbearance agreements that I have seen usually say the months you have missed, you got to make them up in this following months. Well, if somebody can't make one mortgage payment, I'm not sure why a lender would think that in month 7, they would be able to make 7 monthly mortgage payments all at once. It's a rather unlikely scenario. So they would at times then, as an option B or C, they provide some alternatives. One would be to try to get a loan modification or provide a certain catch-up plan, if you will. But it also then comes down to not everybody qualifies for a loan modification, which is basically the same as if you buy your house just now and you are starting your mortgage fresh, you no longer have arrears, but then you also start that new time period. Again, the 30 years or 15 years or what it is, it basically starts over. So you're no longer in arrears, but then you got to qualify for that. Financially is also not necessarily advisable if somebody is, say, 60 years old and you enter into a new 30-year mortgage. Well, you will be paying for a long time, right? Before really the mortgage is fully complete. And the catch-up agreements as another option were also, sometimes they were very favorable, they were workable with only smaller catch-up amounts, but sometimes they required significant catch-up amounts. And if you have a $3,000 mortgage and now they're saying, well, you missed 10 mortgage payments in the forbearance, why don't you catch up and pay another $2,000 a month to catch up, right? And then for many people, that would be very difficult to come up with that amount. And I think, although there are a couple options at the end, I think what frustrated many consumer lawyers and people observing the situation is really that the banks chose forbearance, and legally, again, forbearance means once the time is up, you got to be current again. We would have wished they would have gone for a deferral instead. And a deferral is literally, we are putting the pause button, we are moving everything back for the agreed upon period of time, say 6 months, and then payments just pick back up. So literally, your mortgage loan was just extended by 6 months with the 6 month $0 period. And that would have been good because nobody falls further behind.
Oh, yeah. So I do believe that is what some people think forbearance is. That's, I guess, what I've heard, homeowners explain to me is like, oh, well, no, they're going to tack it on to the end of my mortgage or that type of thing. So I guess they need to read their agreement that they signed with their lender to kind of know where that is, right?
Yeah, absolutely. That is the crucial part, because in layman's terms, when we're talking about this, many people, they say, oh, forbearance, deferral, but legally it has a different meaning. And the banks, they have big legal departments and outside legal counsel. They know exactly what they're offering, and they have decided not to opt for a deferral. So I have maybe seen one agreement that was a true deferral that literally just puts the payment on pause for a period and then just resumes them and extends the contract at the back end. But 99% of the offers that were made, they were all forbearance offers. And it has put significant hardship on homeowners that really were not aware that suddenly another big lump sum payment is due.
Wow. So what impact does forbearance have on someone's credit if they took a forbearance? What are we looking at in the future for people's credit?
Uh, it is supposed to not cause any late fees. So the CARES Act said if forbearance is offered, late fees and related attorney's fees were not supposed to be charged, so that there is no adverse effect. Whether that is truly the case, I think the practice will show, and I understand you have yourself had some experience with that with the client, that it didn't work as well or as easy as everybody would have hoped.
Yeah, that it kept them from purchasing another house. We were able to work with the lender, get the forbearance paid back, and get them into their new home. So that's what we're seeing, is that from what I was told, you couldn't buy another house for 12 months had you taken a forbearance.
There is no legal requirement, so there's no law saying there's a certain time frame, and where all these requirements usually come from are the banks, right? It is always problematic because banks oftentimes, although they should be, they don't seem to be in the best position to really evaluate a person to see how credit worthy a person is. I've seen people in bankruptcy that simplified a bankruptcy because they needed to stop a foreclosure. There was a significant dispute and the lender didn't want to communicate, but there were several hundred thousands of dollars of equity in the property. The income was significant of this debtor, and the bank said, no, while these or those things are happening, we are not refinancing, we are not working with you. And that was a significant problem, but it's literally a bank, an in-house created requirement, if you will. So sometimes the banks just say, oh yeah, if you choose forbearance, we will not let you, re-qualify you for a new mortgage or anything for a 12 months period. Is it justified? Maybe, but I think also, who knew about that before they entered into the forbearance? Yeah. Right? In generally, it's nobody. And clients that I've had and people that have called me, they said, oh yeah, they informed me I'm now on forbearance. I said, oh, would you like to be on forbearance? I said, no, I mean, I can make my payments. And I said, well, then let them know immediately and don't do that, right? Oh, and it's just so easy when it is not properly explained what forbearance is, and then in the beginning there actually have been lawsuits against that filed in the past. I believe there's a class action underway against Wells Fargo and other banks for basically without proper notice putting people into forbearance status that they didn't even ask for. It was generally assumed that the pandemic may have affected people and therefore we put you in forbearance.
So with those, when that, because I'll tell you, I still have a student loan, and they put me in forbearance on my student loan, and we just continued to pay it because I was so close to paying it off. So
Right.
is that the option when, say, Wells Fargo puts you in forbearance? Can you just continue to make the payments?
Yes, they can. There is no basis for them to reject any payment. And what is important, although there are all these generically pre-printed letters that you get, if it's from your mortgage company, pay close attention to what it is. If your student loan is in forbearance, it's a little bit of a different story. I don't think they take that as seriously. The lenders generally run your credit report, but as you said, if somebody is in forbearance, it might prevent them from refinancing, purchasing a new home, entering into a new mortgage, just by virtue of the bank's internal guidelines when they said, if this has happened, we not touch it for a year.
Oh, wow. All right. So with this, the rental moratorium, which has been extended, how is that? Were landlords able to go take forbearance on rental properties?
Yeah, I think there is generally there's no requirement that it be your residence. It's again that the lender would have to approve that. When in doubt, if it's on the residence, the chances are always greater than on an investment property. That's very clear. That is in any financial circumstance, if it's your residence, is a much more vested interest than in an investment property. I think this would be, from what the governor has indicated, the last extension of the eviction moratorium. And from what I could tell based on the news yesterday, it has been extended to August 6th again, which is, of course, for if you are a property owner, and in Hawaii in particular, many people, they have an ohana unit or even in their own house, right? If it is big enough, they're renting parts of the house. And I had a significant number of calls and inquiries about what can be done when you're a landlord or landlady and you have a non-paying tenant in there. And quite frankly, very, very little is the answer, because evictions hadn't been tolerated, were not allowed, wouldn't be heard in court. And some tenants vacated voluntarily, but some tenants just sit in there until they can afford anything else, and suddenly they are gone. And I think that's also a little bit overall of the problem. There seem to be not really a consideration for property owners, real property owners, that say, I want to make some money, or I want to help, that somebody else helps me pay off my mortgage. They were really left hanging most in this entire situation, because I do know there were also rent funds that were set up and just now renewed by the city and by the state. And although there were some funds in there, they I don't know, they covered probably a small percentage of the requests that came in, and they were capped. So I've been contacted and been in touch with numerous homeowners who were out significant amounts of money based on the eviction moratorium. And well, what's the consequence down the road? It always depends on who's hit and who is affected, right? If the landlord or landlady falls behind with the mortgage payment, then it will probably at some point show up on their credit report, right? Even if it is otherwise good. In a worst case scenario, if they can't pay the mortgage, a foreclosure may be initiated, if it's otherwise allowed. And that is not helpful. And another point is, the tenants, my guess would be that more than half of the tenants, if not more, will not be paying back any unpaid rent. It is sometimes very futile to pursue them. You gotta find the person, you gotta get a judgment against the person, but then comes the part you gotta collect. So unless somebody has work income and can be garnished, that is very difficult to accomplish, to make yourself whole for any lost funds during that time.
Yeah, we're seeing a lot of listings because it is a great time to sell right now. So landlords are putting their properties on the market for sale, but they're tenant occupied with tenants that aren't paying rent.
Mm-hmm.
So that's a very hard thing to sell. But how does that work if you purchase a property that has a tenant in it? Do you have to honor the eviction moratorium, or is it because you weren't the landlord that signed the lease? Does that change anything?
It technically doesn't change anything, because as long as the eviction moratorium is in place, whether it's the current owner or the new owner, um, neither one can evict anybody. That is the problem, and it's actually a very interesting question, because if you do sell a property and somebody buys it with the assumption they can rent it and then they cannot, oftentimes that leads to a damages claim, right? If the purchasing party, who is an investor, says, I bought this so I can start renting this immediately, right? Then they say, but now I can't, and I had to wait 2 or 3 or 5 months so until I evicted the people. So now you owe me that money that I couldn't make, right? So I think it's good to point out, especially for investment properties, to look at the rental, the tenant situation. If there are tenants there, maybe highly advisable to put clauses in there that they'll try to comply with the landlord-tenant code, but they are subject to eviction, the eviction moratorium, and that's a consideration. So I think not that the parties are pitted against each other, but like a proper disclosure that from the beginning everybody knows where they are at.
So yes. So we do see that there are a lot more people on island. Businesses are opening up. So with the economy rebounding, what do you think we're going to see in the future? Um, it's totally your opinion. So we don't have crystal balls, but what do you expect to see?
That's really very difficult to predict. Excellent question. I think everybody is asking themselves that a little bit every day. Like we discussed before, we went online. It's who would have thought that the rental market here in Hawaii and literally nationwide would take such an upturn. That is so surprising that it has developed to such extent. And on the other hand, I was surprised that the bankruptcy filings really went down drastically. It is surprising, and I think it has a lot to do with eviction and rental moratoria. But given how much businesses have suffered in our community, and only now slowly really recovering, and that the governmental support is ending in the very foreseeable future, then we will really see how much the government support has meant to the economy. Because for now, it's fair to say it has carried it. It seems, combined at least with the eviction and foreclosure moratoria. But the visitor numbers here in Hawaii, the tourist numbers are already at the pre-pandemic level. We will probably see more activity in the travel area. Construction has been relatively strong. I think it will be retail would depend on how that develops a lot, and restaurants and how they can rebound and recover. Will there be a further selection of long time places that are closing down? It is difficult to foresee really where this is developing to. And the more you read about it, I don't think anybody has the full grasp of where we are and has all the numbers together and looking at it, that it works. It seems to be, it's still the government measures are very reactionary as to, oh, we need more PPE, so now let's negotiate. We're getting that's like, oh, we should really start. Do we have the vaccine? Where do we get? Oh, let's get more. Okay, so let's overbid some. It has been very reactionary, and now we are 15 months in or so. I think we should get a little bit ahead of it. But when truly the eviction moratorium ends, a number of claims will be filed. Foreclosures this year will be ticking up again, because yes, some properties are sold way above asking price within a few days. I mean, good for you, right? This is there, but also not all of them, right? It is not in all areas of the real estate market is it looking up necessarily. So it is very difficult to predict where this is leading, because I think nobody really knows, have we reached the bottom yet of the financial outfall and shortfall of what has happened. And everybody has said the bankruptcy filings will go up for businesses and for individuals. So far, I think we are still roughly 40% below the previous year, and it has been for all the months like that. So it is surprising that things haven't worked more, and that there have been more issues with financial hardships.
Yeah. So if someone does find themselves in that situation, what steps do they need to do? What do they do first? Just give you a
I,
call or
oh, absolutely, absolutely. I think that what I always tell people that I think it is very smart that they're calling me or anybody for help, because I think first it is the realization. Most people that there's a problem, because most people are really going about everything without any idea of budgeting, and they just suddenly say, "Oh, I can't pay off the credit card in full." And I say, well, we just do half this time. And then they always do half. And then they start paying maybe just the minimum payment. And then they have the new credit card that they're also working their way. And it's a progression. But then they don't notice, like, hey, it's not working financially as well anymore as it used to. And I think the first part is realization. Things are not as they were. And when that happens, yeah, reassess your finances, budget, and we do free consultation. So you can call, and it doesn't always have to be bankruptcy. A lot of people feel a lot of shame or don't want to deal bankruptcy. That is a taboo word they don't want to deal with. Bankruptcy is a fantastic tool for many people, and we've saved numerous families their houses over time, and put them on repayment plans, and bought them time to catch up, and bought them time to avoid foreclosures, so that they have the time to maybe enter into a loan modification, or even have the time not to face a foreclosure, but to sell a property on the open market as a not distressed sale, which you as a real estate expert will know yields very different outcomes, usually financially. So we would recommend realize, and then talk to somebody, and really, feel free to call us. We do free consultation, and we'll look at what is the situation like. Can you save your home? And it's always good when people call us sooner rather than later. Sometimes we tell them, I don't think you're in a situation where you need to file a bankruptcy, but you need to watch your budget. If this is not developing as you're planning, we can foresee that you're going to be underwater. The income will not match your expenses, and then you're going to fall behind on something, and that usually over time then triggers a foreclosure, or they can't pay on the car loan or something. Oftentimes it happens when the credit card companies, for example, now are suing, and if you're being garnished, for example, now it's no longer a choice to make a payment. It just comes out of your paycheck. It's a bigger chunk than what you want to pay, and that translates then usually into problems with the mortgage payment, with the car payment.
All right. Well, thank you so much. And again, if any of you have questions, like he says, don't wait to call. You can call me. I can connect you with Lars, or you can give Lars a call. His website is up on the screen. And thank you so much. I have learned a ton. And thank you for joining us. And this has been The Life of the Land is in its Real Estate. And I will see you all in a couple of weeks.